And then this is the most important part. Mortgage lenders use old scores. Mortgage users use the equivalent of Vista. If you're familiar with Microsoft and the various iterations of the operating system, they're using a score that's like 4 or 5 generations out of date. And I do this for a living, and it's hard to keep track. But the thing to keep in mind is if you are in the market for a major loan, like a mortgage, you're going to want to see at least the same scores in the same ballpark that those mortgage lenders are looking at. And that's not available for free that I know of. So if it were me and I was going for a refinance or a mortgage, I would go to my FICO and I'd pay the money to take a look at what those scores are. So I have a good idea what to expect. And the other nice thing is on my FICO, they have kind of ongoing information showing you what interest rates you can expect based on your credit score. And that's really handy information to have when you start going out there and shopping, because you can tell kind of if you're getting the deal you should be getting versus getting snowed by a mortgage broker.
And today we're joined by Liz Weston. Liz is a columnist and certified financial planner whose goal is to help us get smarter about money so we can get on with our lives. She's the author of 5 books, including the best-selling Your Credit Score, How to Improve the 3-Digit Number That Shapes Your Financial Future. What is the takeaway from the book? Why did you write the book? What are people going to get away from this?
Well, I wrote the book. The first version was back in 2004, back when dinosaurs roamed the earth and people didn't know what a credit score was. So the initial mission was just to explain to people what these scores they were hearing about were. And you got to remember, not too long before that, we actually weren't supposed to know that credit scores even existed. Yes, there was an agreement between FICO, which is the leading credit scoring company, and all the lenders they supplied these scores with. The agreement was you do not reveal these to the customer. So it was supposed to be background black box kind of thing. But as they started being used in mortgages starting in the mid-90s, suddenly people started hearing about it and being curious about it. So there were back then a bunch of myths about what went into your score and what didn't. So I decided to sit down and kind of, okay, here's what's real, here's what's not. The funny thing is, through 5 editions of this book, the chapter about myths hasn't changed at all. It's the one chapter I haven't had to rewrite at all because the myths just stay there. It's like, carrying a balance will help your score. No, it won't. Closing accounts will help your score. No, it won't. So there's all these things that people, think they understand about credit scores. And it's great people know what they are now. That's awesome. And people know in general, what goes into them. But how they're being used is still, I think, a big mystery. And I think right now, NerdWallet just did this survey about credit and credit scores. And we found so many people did not know that credit scores are used by utility companies to determine how big your deposit is. Your cellular company, T-Mobile, said that half of its customers could not qualify for its best promotional rates because of their credit. So your wireless company is using your credit. Insurance companies, this is huge. Your credit score or a version of your credit score is being used to set your premiums for car insurance and homeowners insurance. And it's a big factor. I mean, Consumer Reports went in there, did this really great study a year or two ago and found that your credit score can matter more than your driving record in terms of what you pay. It's between having a good score and an excellent score can be hundreds of dollars a year. So this is something that's kind of taken over kind of in the background. And a lot of people don't know that's going on. And I think a quarter of the people we surveyed didn't know that their credit score could affect whether they could get an apartment or not, which tells me they haven't gone and applied for an apartment anytime lately. But, your credit information is out there. It's permeating your financial life. You need to know how this stuff works and you need to pay attention to it. Typically not yet. Is that vague enough for you?
Yeah.
Right now, the FICO, like I said, the FICO is the most commonly used score. Vantage Score is the rival. That's the one that you get for free typically when you go to a site and sign up. Both of those are drawing on pretty traditional credit report information. There are alternative scores and alternative credit bureaus that are collecting all that information. What those alternatives are trying to do is basically make the tent a little bigger. They're trying to find credit-worthy people who don't generate credit scores. They don't have any credit accounts. They don't have credit cards or loans or whatever. If you are trying to sort of build and get into the world of credit with these alternative means like paying utilities or paying rent or whatever, that could be taken into account by these alternative scores. But right now, your FICO, the FICOs that most lenders are using, is not taking that information into account. I'm actually writing a column about what to do when your emergency fund runs out. And one of the things we talk about is in a lot of winter states, they will not turn off your utilities in the winter. So you actually have, 5 or 6 months where you cannot pay your bill and then catch up when you get your tax refund or whatever. Not the way I recommend running your financial life, but if you are in a spot, that's a way to go. As long as it doesn't get turned over to collections, it's probably not going to hurt your credit scores. If you do the same thing with your credit card, you are going to watch your scores plunge overnight. They are not nearly as forgiving. Well, my colleague Bev O'Shea just wrote about this for NerdWallet a couple of months ago. And again, these are the alternatives. These are not, the information's not being used in the credit scores that most lenders use. The latest version of the FICO is called the FICO 9. That does include rent information because the rent information is showing up at the credit bureaus. Now it's becoming more mainstream. But the FICO 8, which is the most commonly used score, doesn't include that. So you can be paying your rent, month to month, and then paying extra to be included in these alternative credit bureaus, and no lender is going to see a score that takes that into account. At least not yet. I mean, that could change. The pitches I see for these, pay your rent, get credit, or build your credit, is they're not being clear about that. They're not being clear that they are way ahead of the curve at this point. So we go back to the same advice. If you want to build your credit score, you have to do it using traditional credit, a secured card, a credit builder loan, something like that to get you started.
And we've mentioned this a few times, but I'm actually fairly confident or know that this is going to be shocking to some people. Is there even a set amount of how many credit scores are out there? I think most people just think their credit score is the credit score. And isn't there some ridiculous number, like over tens?
Well, no, I think we have hundreds of scores. I mean, once you break it down. And part of that bad credit survey that we just did, there was a significant minority. I want to say somewhere about 1 in 4 people thought they had one score. And you don't. You have many, many scores. They change all the time. So let's see if I can condense this as much as possible because, man, it gets complicated fast. All right, I've been talking about FICO. That's the leading credit score. Okay, the FICO 8, that version is the most commonly used score. However, there are different generations of the FICO score, and there are different versions of it tweaked to different industries. So, and there, of course, are different scores based on which credit bureau you're going to. So you might have a auto score 5. Your lender might use an auto score 5 from Experian, which is going to be different from the bank card 8 that would be at TransUnion. I mean, we're talking so many different versions of this. I did a post for my blog a couple of years ago where I pulled all my score or many of my scores from myfico.com. If you go there and you pay $60, you get your FICO 8s from each bureau, and you get the 5 or 6 most used scores from those bureaus. And they are on different, and these are all FICOs. We haven't even gotten to Vantage Score or the others. And there could be a 100-point difference because, the auto scores are on a 250 to 900 scale. The regular FICO scores are on a 300 to 850 scale. So it gets really, really complicated really fast. And then, as I said, the Vantage Score was created by the bureaus as a rival to FICO. So it's not used nearly as much, but it's the score you're probably going to see if you go pull a free score. Like on NerdWallet, we have a Vantage Score 3.0 from TransUnion. Again, it'll give you a general idea of where your credit is, but it's going to differ from the scores that your lenders see. And then this is the most important part. Mortgage lenders use old scores. Mortgage users use the equivalent of Vista. If you're familiar with Microsoft and the various iterations of the operating system, they're using a score that's like 4 or 5 generations out of date. So it can be very different from either the FICO 8 you're looking at or the Vantage Score you're looking at. So are you completely confused now? And if you aren't, you're not paying attention.